Sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously. Create dozens of quick lists. Display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. Today we're Wednesday, April 29, 2015. Question bar is open, folks. If you have any questions, feel free to ask them. Today there are some movement on the market. Yes, we have the FOMC announcement that will be released at 2 o'clock. There's a risk in the movement I'm going to show you today, but still there are some nice opportunities on the TSX as well as the New York Stock Exchange. But the key is buying some positions right now. The best breakouts I'm going to show you today, the best opportunities to buy today, even if you're buying them right now, the risk is that the 2 o'clock when the FOMC announcement will be released, if ever investors interpret that negatively, those breakouts might not pay off. So you might as well remain maybe a little bit more patient, wait for the end of the day to buy those best buying signals, or say, you know what, I'm willing to take that risk. I'm going to go with half positions. And then if the FOMC announcement is still positive, I'm going to hold on to my current positions. And then I'll be able to take some profit quicker because I'll buy it at a cheaper price. So that's actually the strategy and the risk that we face right now with the best buying signals that we have on the market. But before we talk about the best buying signal, let's take a look at the news though. In terms of the news, we had several companies that released their earnings. On the Canadian side, a lot of companies have missed estimates. CGI Group, Cenovus Energy, all of them did really bad though. If we take a look at this for CGI, you see total decline there. We had that stock in our analyst shorts portfolio. We decided to close it around this area here. So it was a good move because we didn't have to tolerate a loss below that support. We're not so lucky with a stock that is called United States Steel. We had that stock here in our analyst shorts portfolio at MarketGurus.tv. We did take some profit on that stock here. We knew that yesterday we were really hesitant to close out positions because the stock was testing its resistance. But today, the stock announced some weak earnings. They made a loss. They were expecting a profit. The stock took a big hit. Why we're remaining patient is because intraday-wise, the stock is stabilizing. We believe that with the FOMC announcement, if ever it's interpreted positively, if ever there's a wave of buyers going into the resources, well, we might see a rebound in United States Steel. So instead of closing it right now, we might close it at least if it rebounds around the price that we paid on that stock. We also had several gold companies that released their earnings, such as Yamana Gold. They made a loss, but so far the stock is staying totally neutral, unlike other gold stocks. And also the thing that could allow the resources to pursue their momentum, it's the US dollar correction. So can this correction continues? Right now we're going below the 100-day moving average. There's that support that's there on the US dollar. So there's a possibility that we might have a rebound. It all depends on how the FOMC announcement will play out. The thing is, I see it so oversold, that it's really likely that we might have a rebound in the US dollar. So this decline has been going down for so much that I don't think we can only rely on the US dollar to determine if we have enough juice to allow the resources sector to pursue the rally. I believe that the stretch has been so strong on the US dollar decline that we actually could have a possible correction on the resources even if they're going down. And the thing is, this is why you should definitely remain cautious in the buying signals I'm going to show you. In terms of the economic indicators, we had the GDP reading in the US, anemic growth, 0.2% increase, so that's really not so positive. And this is creating some kind of a fear in the markets. When we have GDP that's at 0.2%, investors don't know what the Fed is going to say. Is the Fed going to say, you know what, GDP at least is growing? It's 0.2%. It's not that great, but still it's growing slightly. So we will keep the same strategy of increasing interest rate during the year. And the sector that is being impacted is the financial sector in the US. It remains neutral, but there are two sectors that are two types of stocks that are having the counter effect. For instance, you have banks that stay strong because if the Fed is going to raise interest rate this year, banks are going to benefit. They're going to be able to charge higher for the loans. So Bank of New York Mellon is staying strong. Citigroup could break out higher than $54. It's among the list of the stocks that could break out. JP Morgan Chase also could be a breakout higher than 63.56. So it's among the list on Market Gurus that TV of stocks that could break out. But there are several breakdowns, especially REITs, because if we have a rate hike, those REITs, their financing costs will be higher. So Realty Income, clear breakdown. Aflac, clear break. It's an insurance company. It's not a REIT. Kimco Realty, clear breakdown. Warren Realty, clear breakdown. Same thing too for Equity One. So there's a selling pressure among real estate stocks, and it actually creates a counterbalancing effect with banks that stay strong. And all this because they expect the Fed to potentially raise rate during this year. So we have the Nasdaq here that's pursuing its correction as well. There's a lot of stocks that continue, big caps that continue to remain weak. For instance, on MarketGurus.tv, we have one exposure on that stock on the Nasdaq, which is part of the Nasdaq Q100. So the 100 biggest company on Nasdaq, it's ESRX. If our ESRX goes below that support of 84.50, though, we're gonna have to close that position. So far, we have the Nasdaq that is pursuing its correction, and the Dow Jones as well. But the TSX, you see the TSX is staying neutral, but there's one sector. So here it is, the sector where we have a movement, where on MarketGurus.tv we have published a list of the best breakout. It's the energy sector. Now, let's take a look here at the list of the energy stocks. First of all, those are the nice breakouts that we have in the sector. Kelt Exploration, if you're buying today, 850 as an exit point. Grand Terra Energy, clear breakout, exit point below that support, around 425. Pentaid Pony Petroleum, a stock to buy at the bottom. Target clear, 761 to take some profit. Exit point clear, below that support at 671. Berkleaf Energy, that's a stock that we had in among our analyst search portfolio around this area. We want to be a little bit more patient to see how the FOMC announcement is going to play out. If it's positive for the resources, well, we prefer to be patient and wait for the stock to pursue its rally to take some profit at a higher price. So Berkleaf Energy, we're being patient, but today it's a breakout. For those of you who didn't have MarketGurus.tv, we're not able to get in on that stock on April 23rd. When we recommended that stock as a buy, well, today it's an opportunity as a buy. Exit point has to be at $8 on a stock like Berkleaf Energy. Several stocks in the US also are breaking out. We have, for instance, Marathon Oil Corp that is breaking out, Precision Drilling Trust, exit point 675, SM Energy, clear breakout, exit point $54, EP Energy, clear breakout, exit point 1324. So this is a list here of some stocks on the US that are breaking out, so you can pick up the best ones. And on the TSX, there are some of them here, like Kelt Exploration, Grand Terra, Berkleaf, and Pentaid Pony Petroleum. So this is the list. As I said, if you want to get access to all the lists, it's all on MarketGurus.tv. So that was a question from yesterday from Isabel. Do you think HVU will be good for this afternoon? You were talking about yesterday. Well, finally, if you bought HVU yesterday, Isabel, you see that in the yesterday afternoon, it was not that great, right? It was it went totally down. So this is why it's important to not go too ahead of the market. Take a look at how the market is reacting. You have to take a look at the SPY to determine if HVU is going to be good. So far, the SPY still maintains itself within this upward corridor. HVU will only be good if the SPY could go above 208, 207 points. I think then we'll have some clear momentum or some clear selling pressure on the SPY for HVU to be good. So far for me, HVU is not good, especially ahead of the FOMC announcement. I don't know what markets are going to do, so I would definitely not buy HVU right now, because buying it today, there's a support that's there at 208, so there will not be enough points on HVU to be able to make that trade be profitable. So this is why HVU for me, I don't think it's a buy as long as the SPY doesn't go below 207 points. Now, Jean bought CSE yesterday at 356. Okay, so we bought in the breakout. Narrow resistance, but enough percentage gain to take a profit, hold, sell, and buy back if it breaks out above resistance, or sell half anyways for a pittance of a profit. Thanks. Well, you bought at 356. So 356 or 370. Yes, you can take some profit. I would say take some profit on that stock. Hold on to it. Now, I think if ever CSE can reverse that downward trend and break 375, you'll just have to take another round of profit on a stock like that. And now let's put a target though. If it goes above 375, what are the targets? The next target now becomes around 389. So I would say good job. You hold on to it. As long as the stock remains above 365, there's no need to close that positions. If it does break out, 389 becomes your next point where you should close that positions or take some profit, because this is where we will have another pause on the stock like CSE. But you can applaud yourself because you did a good trade on that stock. You were disciplined, you took some profit when you had to, and now the stock is neutral, so hold on to it.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above.
So we have one question from Mark here. Mark BNK. So Mark BNK, you bought at 352. So you bought a stock within this sideways formation. If I remember right, on this sideways formation though, I think it was a good trade because that's what we advised. That's what I said when the energy sector was within a neutral cycle, but we had a lot of buying pressure on that sector, but the sector was unable to start a bullish cycle. So what I said is that if you have some stocks that are closely testing their resistance, you could start to build up your position. So maybe that's what you did by looking at the sideways formation that we had on the stock like that. Now, where is the exit point? The thing is that you have to put your lines. And when I see the stock like that, first thing you could do is that you could look at the chart here and say, okay, where is a support? You should close your positions if it goes below a support and buy your positions if it goes above a resistance. So where would be a support? Well, you see here that on December, we tested a point around 346, 340. Same thing to in February, 346, 340, we went down. So that was a resistance. And this resistance here now became a support because every time we tested around 346, we actually had a rebound. So 346, 340, now becomes a point where investors are reluctant to let the stock down. So 346 and 40 now becomes your exit point. Also, you see this, it also corresponds to this upward trend. How do you trace an upward trend? You just try to connect most of the bottom. So you connect the bottom here, a bottom there. You cannot really connect this one here, but it gives you approximately around 340. Also, 340 corresponds to the 100-day moving average, which is around this point here. So it's definitely clear that at 340, it's a point where BNK Petroleum should be closed. Right now, I think there's no need to close that positions. You should remain a little bit more patient. The energy sector is not yet starting a bullish cycle, but it could do. There's starting to be some breakouts in that sector. That's positive for your position on BNK Petroleum because it's a buyer's momentum on the sector. But 340, 336, for me, it's a point where you should totally get out on BNK Petroleum, because if we do go below this important former resistance of December and February, which also corresponds to the 50-day moving average, well, the next point now becomes this 50-day moving average around 316. So the loss potential will be too great from 352 to 316. So at 340, that will be the point where you should get out. I hope the analysis is kind of clear, Mark, to allow you to, in your next trades, to be able to determine how could I determine my exit point on a stock. Now we have one question from Miss Ling Beng here. What do you think of PHM as a buy? Thanks for excellent analysis and education to your viewer. Well, it's my pleasure, Miss Ling Beng. If my analysis can help you, that's our pay, right? Not alone, of course, we're all a team there, and definitely trying to do our best to help you out. Now, patient home monitoring. Why do I think of that position? That stock, Mr. Ming, I have to tell you, it's really one of the best performers on the venture index, right? The thing is that there's still that downward trend that is there on a stock like that. So, look, you're asking me a tough question, I have to admit. Let me start with the things that I like with a stock like that. I like the fact that this important upward trend since December, investors are reluctant to let the stock go further down than this, which is a good thing, right? We have a stochastics that's starting to tilt, a histogram, sorry, that's starting to be towards the positive territory, which is a good thing. That is showing us some buyer's momentum. We have the 10-day in red, which is still above the 30-day moving average, which is still a good thing, right? The things that I appreciate a little bit less, that I like less, are, well, stochastics we have around the 30% range, which is also a good thing, but I don't have here with the histogram. So I'd like to see the MACD. So the stochastics is good. The moving average short term above the medium term is good. Histogram is good, but the MACD is not good. So this is the thing I don't like. We also have this downward trend that is there on patient home monitoring. So it's a tough trade because that's not a typical breakout that we would recommend on MarketGurus.tv. We classify that stock as a pursuit of the bullish cycle. So if you're buying that stock today, Miss Lingbang, the thing is your exit point now becomes below that important upward trend, so at around 140. So from 164 to 140, that's the loss potential that you have on a stock like that. Or you could say to yourself, you know what, I'm going to wait for clearer shadow information. There's a risk that it could do so because we are between the 10 and 30-day moving average. So this could correspond to a resistance and this could correspond to a support. So if you be more patient and wait for a stabilization phase and another breakout higher than 170, that could be a buy as well. But if you're buying today, the risk is that 140 has to be your exit point, and that becomes a big loss potential on a stock like PHM. So that's my advice on a stock like that. It's really a tough question that you gave me today, Miss Lingbang, but it made me work my brain, so which is a good thing. And now for the best day trade of the day, it's a stock in the energy sector. It's a bullish ETF. It's HOU. HOU has been recommended on MarketGurus.tv for the best day trade of the day since this morning. One entry point here, one there, another one here, another one there, another one there, and again another one. So almost 5 entry points on an ETF like HOU. That shows you the strength of the momentum of the energy sector. But as I said, beware, because there's the FOMC announcement at 2 o'clock. So even if you're buying some of the best breakouts of the day on the energy sector, such as those ones here that I'm showing you on the graph, such as those ones here that you have on the New York Stock Exchange, take into account that go in gradually with your positions. Do not open a full positions. There's the FOMC announcement at 2 o'clock. What you could do to minimize your risk is that you could wait to see how the markets are going to react after the FOMC announcement. And then if those breakouts stand out, continue to maintain their momentum, you might buy them. But if they are not keeping their bullish momentum, well, that would be totally a false signals on the energy sector. And the risk is that, first of all, we have the US dollar that is close to a potential rebound, which will be negative for the resources, it's totally oversold. And we also have the uncertainty concerning the FOMC announcement. We don't know what the Fed is going to say and how markets are going to react. So those are the risks that you face if you're buying some positions right now on the energy sector. So that's it, folks. See you tomorrow on the Swing Trading Show, and I wish you all a good trading.